Feeling this. Feeling this.
I had so much to do for the wedding last week. The barrels had arrived at the wharf, but I had no time to go there to clear them. Then Samantha told me about Kingston Wharves Click and Collect cargo clearance. They clear for you, you only collect. It is the convenient way to clear your barrels, boxes, and other personal shipments at Kingston Wharves. I just visited the website eservices.kingstonwharves.com. Click and collect is as easy as 1, 2, 3. Register online, pay online, and pick up at your convenience.
Kingston Wharves Click and Collect, a fast and convenient way to clear your personal shipments. Contact us at 876-577-8905 or call your shipping agent.
Feeling this. Feeling this.
I had so much to do for the wedding last week. The barrels had arrived at the wharf, but I had no time to go there to clear them. Then Samantha told me about Kingston Wharves Click and Collect cargo clearance. They clear for you, you only collect. It is the convenient way to clear your barrels, boxes, and other personal shipments at Kingston Wharves. I just visited the website eservices.kingstonwharves.com. Click and collect is as easy as 1, 2, 3. Register online, pay online, and pick up at your convenience.
Kingston Wharves Click and Collect, a fast and convenient way to clear your personal shipments. Contact us at 876-577-8905 or call your shipping agent.
Feeling this. Feeling this.
I had so much to do for the wedding last week. The barrels had arrived at the wharf, but I had no time to go there to clear them. Then Samantha told me about Kingston Wharves Click and Collect cargo clearance. They clear for you, you only collect. It is the convenient way to clear your barrels, boxes, and other personal shipments at Kingston Wharves. I just visited the website eservices.kingstonwharves.com. Click and collect is as easy as 1, 2, 3. Register online, pay online, and pick up at your convenience.
Kingston Wharves Click and Collect, a fast and convenient way to clear your personal shipments. Contact us at 876-577-8905 or call your shipping agent.
Feeling this. Feeling this.
I had so much to do for the wedding last week. The barrels had arrived at the wharf, but I had no time to go there to clear them. Then Samantha told me about Kingston Wharves Click and Collect cargo clearance. They clear for you, you only collect. It is the convenient way to clear your barrels, boxes, and other personal shipments at Kingston Wharves. I just visited the website eservices.kingstonwharves.com. Click and collect is as easy as 1, 2, 3. Register online, pay online, and pick up at your convenience.
Kingston Wharves Click and Collect, a fast and convenient way to clear your personal shipments. Contact us at 876-577-8905 or call your shipping agent.
Good morning, ladies and gentlemen. My name is Jeffrey Hall, and I'm chairman of your company. And as such, I'll be chairman of this meeting. On behalf of the board of directors of Kingston Wharves, I would like to welcome you to the 2021 annual general meeting of shareholders of Kingston Wharves Limited. In light of the COVID-19 pandemic and related gathering restrictions, your company obtained permission from the Supreme Court of Jamaica to conduct its AGM virtually. The court order permitting our virtual AGM to be viewed online on both the JSC website and on the company's website is in force. With this in mind, I welcome our shareholders and directors who are represented today by proxy, as well as those registered online and who have joined by video conference. I also acknowledge our stakeholders watching the meeting via live stream. I also acknowledge the board of directors of Kingston Wharves Limited who are connected by video conference. Ladies and gentlemen, I would like to introduce our company secretary and legal counsel, Mr. Stephen Morrison, and ask that he confirm that the required quorum of 3 members present in person or by proxy has been met.
Chairman, I confirm that the quorum has been met.
Thank you, Stefan. I now call this meeting to order and invite our HR manager, Mrs. Walcott Samuels, to open the meeting in prayer.
Good morning. As we pause for this time of prayer, joining me are representatives of each department, each unit of Kingston Wharves. Thanks. Let us pause now and pray. Heavenly Father, thank you for yet another year. The past year had its challenges, but you were with us. You kept us. You made a way regardless of the pandemic. And here we are today, celebrating as overcomers because you were with us, leading and directing all the way. Today, our annual general meeting, we pray a very special prayer for our chairman, our deputy chairman, our board of directors, CEO, management team, and the staff, and pray, God, that you'll continue to bless us, keep, and direct us. And as we go through this meeting, we pray that you'll continue to inspire us so that, Lord, in the end, not only we will reflect on the past, but we will forge forward with new ideas, new zeal, new plans to continue the growth and development of this wonderful institution. In Jesus' name we pray, amen.
Thank you. The notice convening the meeting, to be found on page 6 of the annual report, has been circulated to members, and I now propose that we take this notice as having been read. I wish to inform you that the record date by which proxies to be exercised at this meeting must have been lodged with the company was at least 48 hours before the meeting. We received proxies representing 79% of the issued stock of the company. A list of those proxies is available for inspection. The share register, articles of incorporation, and minutes of the last AGM are also available for inspection by members on the company's website. I remind attendees of this meeting that all voting will take place by proxy. We had asked registered shareholders to appoint either the CEO, the company secretary, or the chairman as their proxies. And I'm pleased to see that all proxy forms have duly appointed one of these persons as proxy. The proxies will therefore move or second motions. Shareholders have also supplied their questions by email, and we remind shareholders that we will continue to take questions by email until 10:30 a.m. Ladies and gentlemen, the accounts and the reports of the directors and auditors have been circulated previously to all members, and at this point, I would like to introduce Mr. Leighton McKnight from PricewaterhouseCoopers, the company's auditors. I now call on Mr. McKnight to read the auditor's report, which may be found on pages 63 to 69 of the annual report.
Thank you very much, Mr. Chairman. Good morning, directors, shareholders, ladies and gentlemen. I read the independent auditor's report as required by the Companies Act. It's not the most interesting thing to listen to, but it's required by law. So it's addressed to the members of Kingston Wharves Limited, and it reads, our opinion first. In our opinion, the consolidated financial statements and standalone financial statements give a true and fair view of the consolidated position of Kingston Wharves Limited, the company, and its subsidiaries together referred to as the group, and the standalone financial position of the company as at 31 December 2020, and of their consolidated and standalone financial performance and their consolidated and standalone cash flows for the year then ended in accordance with international financial reporting standards and with the requirements of the Jamaican Companies Act. What we have audited. Kingston Wharves Limited's consolidated and standalone financial statements comprise the following. The group statement of financial position as at 31 December 2020, the group statement of comprehensive income for the year then ended, the group statement of changes in equity for the year then ended, the group statement of cash flows for the year then ended, the group statement of financial position as at 31 December 2020, the company statement of comprehensive for the year then ended, the company statement of changes in equity for the year then ended, the company statement of cash flows for the year then ended, and the notes to the financial statements, which include significant accounting policies and other explanatory information. We conducted our audit in accordance with international standards on auditing. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the consolidated and standalone financial statement section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with the International Code of Ethics for Professional Accountants, issued by the International Ethics Standards Board. We have fulfilled our other ethical responsibilities in accordance with the IESBA code. Our audit approach. As part of designing our audit, we determined materiality and assessed the risk of material misstatement in the consolidated and standalone financial statements. In particular, we considered where management made subjective judgments, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all of our audits, we also address the risk of management override of internal controls, including, among other matters, consideration of whether there was evidence of bias that represented a risk of material misstatement due to fraud. We tailored the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statement as a whole, taking into account the structure of the group, the accounting processes and controls, and the industry in which the group operates. The group is comprised of 8 reporting components, of which we selected 4 components for full scope audit testing. These 4 components represent the principal business units within the group and are all located in Jamaica, with the accounting records of all entities maintained at the same location. A single audit team was responsible for the audits of all these components. Our 2020 audit was planned and executed, having regard to the fact that the operations of the group remain largely unchanged from the prior year. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the consolidated and standalone financial statements of the current period. These matters were addressed in the context of our audit of the consolidated and standalone financial statement as a whole, and informing our opinion thereon, and we do not provide a separate opinion on these matters. Key audit matters were as follows: valuation of freehold land, plant, and buildings for the group and the company. Freehold land and plant and buildings totaling $10.7 billion and $14 billion for the group, and $7.1 billion and $10.9 billion for the company standing alone, are carried at fair value within property, plant, and equipment on the group and company statements of financial position, respectively. These balances are significant to the financial statements of the group and company as a whole, representing in aggregate 64.6% of the group's and 58.9% of the company's total assets at year-end. The group valuation policy for freehold land, plant, and building allows for periodic but at least triennial valuations by external independent valuation experts who are engaged in the current year to perform a revaluation exercise. We focus on this area for the following reasons: as determining the fair value in respect of land, plant, and buildings is by its nature subjective, with significant judgment applied, including the determination of highest and best use, assumptions relating to useful lives, contractors' charges, labor rates, material costs, property size, price per square foot, location, age, and condition, and due to the quantum/size of revaluation gains that directly impact the group and company statements of comprehensive income. We assess the competence and capabilities of management's external valuers and concluded that they hold the requisite professional qualifications and experience to carry out reliable valuations of the company's and the group's freehold land, plant, and buildings. We obtained confirmations of the independence from the external valuers. We inspected the final valuation reports and agreed the fair value to the group's and the company's accounting records. We recalculated the revaluation gains by reference to the valuation reports and the accounting records. For a sample of external valuations, we compared the current valuations for plant and buildings with the previously completed valuations to determine whether useful lives and ages of the properties were consistent. With the assistance of our own independent expert, we reviewed the valuations and performed an independent evaluation of the assumptions that underpin the valuations, including by reference to relevant market data, as well as determine whether valuations were within an actual and acceptable range. As a result of the procedures above, we determined that the values recorded by management for the fair values and the revaluation surplus were, in our view, not unreasonable. The other key audit matter: valuation of pension assets and other retirement benefit obligations. As at 31 December 2020, the values for the pension surplus and other post-employment benefit obligations in the group statement of financial position for both the group and company total $1.5 billion assets, or 4.1%, and 5.1% of total assets of $384 million, liabilities are 7.1% and 8.1% of total liabilities for the group and company, respectively. The costs of retirement benefits and the present value of these benefits depend on a number of factors and assumptions. Due to the complexity of the balances and management appointed an external actuary to perform the valuations. The assumptions and factors used in determining the assets for the pension benefits and the liabilities for the other post-employment benefits including the following: the expected long-term rate of return on the relevant plan assets, the fair value of the plan assets, the discount rate, future salary increases, expected pension increases, life expectancy, and the expected rate of increase in medical costs in the case of post-employment medical benefits. This was an area of focus due to the numerous assumptions used, the possible impact of COVID-19 on the fair value of plan assets, and because any changes in these assumptions will impact the valuation of the assets and liabilities recorded for the pension and other post-employment benefits. We perform procedures on the valuation of the defined benefit pension assets and other retirement obligations as follows. We evaluated the valuation technique used to perform the valuation of retirement benefits and found it to be consistent with the requirement of International Accounting Standards 19, employee benefits. We assessed the competence and objectivity of the management-appointed actuary, confirming that they are qualified and that there are no affiliation to the group. We checked a sample of employee data submitted to the actuary against information maintained on the employee's personnel files maintained by the group. We assessed the assumptions used by the actuary, which include in comparing them to relevant externally derived data, such as the economic statistics from the Bank of Jamaica and the discount rate from the Institute of Chartered Accountants of Jamaica. We also confirmed certain assets of the plans with the custodians of these assets and tested their fair values by reference to readily available external data, including quoted stock prices and yield curves. Based on the procedures performed, we determined management's valuation of defined benefit pension assets and other retirement benefit obligation was, in our view, not unreasonable. Management is responsible for the other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statements and our auditor's report thereon, which is expected to be made available which is expected to be made available to us after the date of the auditor's report. Our opinion on the consolidated and standalone financial statements does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statements, or knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Management is responsible for the preparation of the consolidated and standalone financial statements that give a true and fair view in accordance with international financial reporting standards and the requirements of the Jamaican Companies Act, and for such internal control as management determines is necessary to enable preparation of consolidated and standalone financial statements that are free from material misstatement, whether due to fraud or error. In preparing the consolidated and standalone financial statements, management is responsible for assessing the group and company's ability to continue as a going concern, disclosing as applicable matters related to going concern, and using the going concern basis of accounting unless management either intends to liquidate the group or the company, or to cease operations, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and company's financial reporting process. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statement as a whole are free of material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect material misstatement when it exists. Misstatements can arise from fraud or error, and are considered material if individually or in aggregate they could reasonably be expected to influence the economic decisions of users taken on the basis of these consolidated and standalone financial statements. As a part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatement of the consolidated and standalone financial statements, whether due to fraud or error, design and perform audit procedures and responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and company's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cast significant doubt on the group or company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the consolidated and standalone financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our audit report. However, future events or conditions may cause the group or company to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the consolidated and standalone financial statements, including the disclosures, and whether the consolidated and standalone financial statements represent the underlying transactions and events in a manner that achieves a fair presentation. Obtain efficient, appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statements. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identified during our audit. We also provide those charged with governance with a statement that we have complied with relevant ethical requirements regarding independence, and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence, and where applicable, actions taken to eliminate threats or safeguards applied. For the matters communicated with those charged with governance, we determine those matters that were of most significance in the audit of the consolidated and standalone financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure about the matter, or when, in extreme rare circumstances, we determine that a matter should not be communicated in a report because of the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Final section. As required by the Companies Act, we have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept so far as appears from the examination of those records, and the accompanying consolidated and standalone financial statements are in agreement therewith, and give the information required by the Jamaican Companies Act in the manner so required. The engagement partner on the audit resulting in this independent auditor's report is yours truly, late McKnight. The report is signed PricewaterhouseCoopers, Chartered Accountants, on the 1st of March 2021, which is in compliance with the stock exchange requirements, Kingston, Jamaica. Thank you very much.
Thank you, Leighton, for your stamina. I would now like to reintroduce to you our other directors with whom most of you will be familiar. Mr. Bruce Breckheisen, Mr. Kim Clark, Dr. Marshall Hall, Mr. Roger Hines, Mr. Charles Johnston, our newest director and a special welcome, Mrs. Charmaine Mirage, Mrs. Kathleen Moss, Mr. Robert Scavone, our Deputy Chairman, Mr. Grantley Stevenson, Mr. Dorian Valdez, and Mr. Mark Williams. On behalf of the board of the company, I use this time to acknowledge the passing of our director, Mr. Harriet Mirage, early this year. Mr. Mirage served the company with distinction as the director for 15 years. We're forever grateful for his service to this company and his contribution to the wider regional shipping industry. Ladies and gentlemen, 2020 was a special year in the life of Kingston Wharves. We were officially recognized by the government of Jamaica as an essential service. This meant that throughout the toughest and most uncertain moments of the pandemic, our team was called upon to leave home and to continue to deliver for Jamaica, for Jamaican businesses, Jamaican consumers, as safely as possible in the ordinary course. This took dedication and commitment, but also outstanding leadership. I want to use this moment to salute Mark and the entire team of over 700 persons for their work throughout the year. I now ask Mark to introduce some of the senior members of the group's management team.
Thank you, Mr. Chairman. I'd like to introduce Ms. Clover Moody, Group CFO, Ms. Valerie Campbell, Director of Operations, Mrs. Denise Walcott Samuel, Group HR and Admin Manager, Mrs. Jordina Ferguson Brown, Financial Controller, Mrs. Simon Murdoch, Corporate Services and Client Experience Manager, Mrs. Frances Mighty Hutchinson, Internal Audit Manager, Mr. Lance Green, IT Manager, and Captain George Reynolds, Managing Director of SAL.
Thank you, Mark. Thank you, team. Ladies and gentlemen, let us now proceed with the business of this meeting as set out in the notice. I now invite Mr. Mark Williams to make a presentation of the performance for the year 2020 and the outlook for 2021.
Thank you, Chairman. Chairman Jeffrey Hall, KW Board of Directors, Mr. McKnight from PricewaterhouseCoopers, Auditors, our valuable shareholders, KW Management Team, members of the media, thank you for joining us this morning. I want to begin this morning by acknowledging God for his guidance in taking us through what has been an immensely challenging year, but one in which we would have capitalized on many opportunities for growth. I extend gratitude to our board for its steady and wise counsel, to the management team and the wider KW staff for your hard work and commitment, to our shareholders, to our customers for your continued partnership with KW on this journey. You are an important part of our successes, and I use this forum today to formally thank you for your unwavering support. This morning, I want to take you through the businesses of 2020 to take a look at Q1 2021 performance, and then to give you an overview of the strategic outlook for Kingston Wharves. As we all know, KW celebrated 75 years last year, and it was an interesting year because of the pandemic. But what we have done through many years is to stand the test of time, and we did that last year. I want to share with you, shareholders, a video that put into perspective the year we had as an international shipping terminal last year. So give me just a few minutes, and I'll share this
At a time when the
video with
world
you.
stopped, ships kept moving. People still shopped, ships kept on proving. The volume of trade that's moved by sea, 90% of trade, actually. Crops that are weighed, cars that are sprayed, and it's easy to see the impact this makes. Fruit and vegetables, toys and collectibles, wheats and grains, the blood in the veins. Like to land a farmer is, ships are to the sea. And if the world is the heart, ships are the arteries, which stock the pharmacies, move essential commodities. So there's a lot at stake across these seas. Without these routes, half the world would starve, while the other half would freeze. Without these bright-colored containers, the four walls in our house that contain us would be empty. The books we read, the animal feed, the oil we need, the global lives that we lead. No oil, no cars, no essential spare parts. The sea's version of stars, those flickering lights on the horizon. By moon and by sun, but the journey is never done. As a supertanker proves, the distance it moves is equivalent to 3 times around this Earth a year. And we are served by over 61,000 ships. The things we buy, the things that shops sell, the 1.7 million seafarers, it's more than just engines that propel this industry. And it's easy to see that a lot is owed to the people that load. 6,000 ports worldwide, but it's not all plain sailing. It's rough seas and piracy warnings and the change that this inevitably causes. The sea covers 70% of our planet, so you can see why we need to plan it. A global community of knowledge and passion, from salt and sugar to the latest fashion. Our ships keep moving products we love using. Ships make the world go. They help trade flow and let business grow.
So, shareholders, that gives a perspective of the international ecosystem of which Kingston Wharves is a part. It was a tough year, but certainly I think we weathered the storm very well. We anchored ourselves during the pandemic. As the chairman shared with you, Kingston Wharves remained open 24 hours a day, 365 days per week. We maintain our relevance to this country and to the region as we move supplies, sanitation supplies, medical supplies, consumables, food, right through the pandemic. We anchored ourselves. As I move to the actual business, I know we do have shareholders joining in from time to time. I want to just give an overview of the type of business that we operate. So Kingston Wharves has 2 broad segments, 2 buckets of business, as it were. We are involved in terminal operations, and we're involved in the logistics operations. In our terminal operations, we do your standard stevedoring of all cargo types. So we do containerized cargo, we do automobiles, we're into bulk cargo, your project cargo that you see during constructions, etc. Our logistics business is where we focus on providing warehousing solutions and third-party solutions. So that is our business. The performance for 2020. It was a creditable performance, so we would have seen revenues of $7.1 billion. Revenue of $7.1 billion, which is 10% below what we did in 2020. Our profit, $2.8 billion, 8% below what we did in 2020. What I want you to do, shareholders, is to notice that certainly the profit position, the revenue and the profit position for 2020 were higher than 2018. We had a special year in 2019 and an even more special year, as you would realize, for 2020. So we do have some good news that the underlying business measures were solid. So that's their group perspective. As a divisional business, so our terminal business would have contributed 69% or $5 billion of our revenue, and our logistics business, the remaining 31% or $2.2 billion. The good news about Kingston Wharves and its business is that it's a diversified operation. So for a terminal business, we're involved in, as I said, containerized cargo. We're involved in automobiles, moving food supplies, grain supplies, construction supplies. So in fact, it's a well-diversified business that really underpin the successes of Kingston Wharves. That's our terminal business. The logistics operations continue to do well. In fact, we've seen growth of 29% in our revenues for our logistics business and continued increase in profit. This business involves order fulfillment, order picking and packing, warehouses, inventory management, etc., postponement service. This year, we've gotten the special economic zone designation, and that has helped to move our business forward, put us in a better position to compete as a global business. Notwithstanding, shareholders, and I know you're going to be very interested in this, despite the headwinds that were against us last year, we achieved, as I said, creditable results. Shareholders' equity grew by 22.5% in 2020 over the previous year. Even while there were challenges, you realize that the company declared dividends of $772 million, consistent with what we did in 2019. And we believe that this is very important. At Kingston Wharves, we pride ourselves in upholding and consistently delivering on our commitments to our shareholders. It is critical for us to continue to operate in a manner that inspires mutual confidence, understanding, and trust. And we want to always be assured that we are a company that is keen to balance the company's long-term viability with delivering profit and reasonable return to our shareholders. 22.5% increase, year value in our business has grown. It wasn't just about the finances for Kingston Wharves. As you know, we're a company that is very committed to giving back. It's what we do. In 2020, we felt that as a corporate company, we had a responsibility to give back to the communities in which we operate. And therefore, we assisted in the Give Back COVID assistance, $3 million. We would have gone to a school within our community, St. Anne's Primary, and donated over $500,000 to help with the Wi-Fi infrastructure. We continued our commitment in giving back to Jamaica Youth Cricket, an association that we have had for over 32 years, and of which we're very proud. And I'm sure that you, as our shareholders, will continue to be proud of Kingston Wharves being a good corporate citizen. So that's an overview of 2020. I want to share with you the numbers for 2021. As we continue to navigate through 2021, COVID is still here, but we have a better perspective and greater optimism, having learned the lessons of 2020. While business is not back to its pre-COVID levels, we are cautiously optimistic of the future. And as you look at the numbers for Q1 2021, the financial results indicate revenue of $1.85 billion, a 1% reduction over the $1.87 billion of 2020. Operating profit for the first quarter is $681 million. I do have some good news, shareholders. The indications are that this business is continuing to return. In fact, our warehouse business for Q1 has grown over 12%. Our car business continued to do well. It has grown by over 4%. And the real good news is that our bulk business, the construction part of the business, has grown by approximately 30%. So the future looks good, and we remain very optimistic about what to expect for the remainder of 2021. So having looked at 2020 and all its challenges and the achievements, and given you an idea of what is happening in 2021, and I do now want to share with you what we believe are the key strategic imperatives, this key strategic outlook for your company, Kingston Wharves. Our focus continued to be on delivering value to our customers. And we say to ourselves, if we're going to do that, there are some key strategic imperatives that we need to focus on. We need to ensure that we're building a world-class cadre of employees. And at the last AGM, I made mention of the detailed work that we're doing in ensuring that we have the best workforce in the Caribbean. It's about accountability and commitment and excellence, a KW way of doing business. We want to focus on the plant and its infrastructure, and I'll give you some more insights in what we're doing. We want to focus on the processes of our business. And certainly for you as the shareholders, you will be interested in that we're very keen on focusing also on delivering profit to this business. So for the purposes of this meeting, I just want to focus now on the issues to do with plant and processes. For those of us who have been reading the international news, you would realize that Kingston Wharves has made a deposit on a new superposed Panamax crane. This is an eco-friendly Panamax crane. We believe that we need to prepare our business to be ready when COVID has passed. And we're very positive about getting the infrastructure in place, and therefore the investment with your money of just over $5 million US. Berth redevelopment. So Kingston Wharves, we are a terminal with 9 deep water berths. We can accommodate vessels of Panamax size and post-Panamax size. Just this week, we have concluded the first phase of an international tender for the refurbishing of berth 7. And we're looking to spend approximately $30 million US to ensure that the infrastructure at Kingston Wharves is ready and can compare with the best in the world. And therefore, we'll be doing further analysis on that, but we'll be spending another $30 million US to get the plant infrastructure ready. So that is about the plant. What about the processes? As an international port, security is paramount. We, along with our partners from the Port Authority of Jamaica, we've invested approximately $2 million US over the past 12 months to ensure that the security infrastructure at Kingston Wharves, and by the extension of the Port of Kingston, is comparable to any within the region. Technology is another strategic imperative that we'll use to drive operational excellence. We'll be focusing on ensuring that we use web-based facilities to do cargo clearing. And I'm very pleased this morning to talk about a new development at Kingston Wharves. In fact, completely new for shipping. It's what we call click and collect. It's a web-based cargo clearance opportunity. Now, shareholders, you'll be mindful of this type of cargo clearance in the air freight business, the efficiency of clearing your cargo. What we're saying, we'll be transferring that success to clearing cargo at the port. It's easy, it's can be done on your phone, it's curbside pickup. We have had good feedback thus far. What Click and Collect offers to the customer is an efficient way to clear your cargo by using your mobile phone. We have partnered with Jamaica Customs. It means, therefore, that you can pay your customs charges using your mobile phone, your Kingston Wharves charges, and also your agent's charges. What will we do next? We want to expand this business, and we're going to do that through diversification and business acquisition. I shared with you last year, shareholders, that we're very opportunistic about acquiring businesses. We're having some conversations. In short order, I'll be sharing with you via the stock exchange about some business acquisition that we're working on to expand the business and certainly to diversify the revenue stream. We're looking at adding an additional cargo type to our terminal business. I would have made mention of the varying cargo types that we are involved in. We're looking at going another step by adding another cargo type. And we're far along in discussions with some international partners on that, and I'll be able to share with you, hopefully not too far from now, the successes on that. We are indeed prepared for the future, ladies and gentlemen. We believe we have a solid business, a competent board of directors, committed staff, competent staff members. We are eager to grow your business. We're very cautious about the steps that we'll be taking. We continue to ask for your partnership in this business, customers and shareholders. And our commitment to you is that we'll continue to manage your business well. Thank you, Mr. Chairman.
Thanks, Mark. Ladies and gentlemen, we invited our shareholders to submit their questions to us ahead of the meeting, as well as throughout the entirety of the reading of the auditor's report. So I now ask the Company Secretary, Stephen Morrison, to read questions submitted by shareholders.
Thank you, Chairman. I'll begin by reading some comments that we received from Mr. Orette Staple. Creator God, what a wonderful day we have been given us. A day when we can all meet using the technology you have given us to celebrate and discuss the affairs of our company. Thank you, God, as we share with management and them with us all that transpired in 2020 in our company. Despite the many challenges faced as a company, in our country, and in our daily lives, you have never left us. As you promised us, you will be with us at the end, despite our many challenges. We invite you, Father, in our midst, and as we deliberate the affairs of your company, of our company, help us to show respect to each other so that at the end, we will all be happy. Bless our chairman, members of the board, and all committees, employees, and all shareholders, and guide us as we all work together to make this company the best and most blessed. All this we ask in Jesus' name. Amen. That prayer from Mr. Staple. I'll go into the questions now. Question 1, this can be found on page 83 of the annual report. Explain why the group applies the acquisition method to account for business combinations. How does this benefit us as a group and shareholders?
Thank Mr. Staple for continuing to attend to the business of our AGM and for making his presence felt. I'd like to refer this question to our CFO, Clover Moody.
Good morning, shareholders. The acquisition method is prescribed by IFRS as the methodology to be used for business combinations and accounting for subsidiaries. The acquisition method allows us to account for all our income and expenses of subsidiaries line by line, and after eliminating any related party transactions. And this, Mr. Staple, as you would know, is all in keeping with helping our readers and users of our financial statements to be able to interpret the financial information better.
Question 2, also from Mr. Staple. This can be found on page 96, the reference. The loss allowance receivables for 2029 was Jamaican 54.8 million. This was increased in 2021 to Jamaican 71.6 million. What accounted for this significant increase, and what is in place to reduce this expected loss? I'll combine this question with another question that Mr. Staple had asked, which has a similar response. And this can be found referenced on page 112. What has accounted for this increase in bad debt of 20.8 million? What measures are in place to correct this as we go forward?
I'd like to refer the question to Clover Moody, CFO.
Okay. In 2020, Kingston Wharves increased its provisions for expected credit losses, and that was due to the effects or the continued effects that we have of COVID-19. So we took the approach that the provisions that we would have had, or the levels that we would have had before, that we needed to increase it based on the negative impact from COVID-19, and that resulted in the increase to which was referred, which is 16.8 million. Management continues to vigorously make our collections from our customers, and that's something that we will continue to do to keep that any losses or realized losses at a minimum.
If I can comment on this point, so the way that we account for credit issues is that we anticipate the expected credit losses and account for them upfront in advance under IFRS. And so this is an area that receives quite a bit of scrutiny by the board and by the auditors, and reflects prudent accounting.
The next question can be referenced in the annual report at pages 110 and 111. Logistics services generated revenues of 2.2 billion Jamaican dollars in 2020 and 2.2 billion in 2019, while terminal operations generated revenues of 5.6 billion in 2020 and 6.4 billion in 2019. Logistics services remain flat, while terminal operations reduced significantly. Explain how we plan to correct this imbalance. Does this indicate that the shippers are transferring their operations?
Thank you, Mr. Staple. Mark Williams.
Sure, Mr. Chairman. Well, Mr. Staple, good question. Thank you so much. It's not a matter of business being shifted as opposed to there's been a global decline in shipping during the pandemic. The good news for Kingston Wharves is that based on the diversity of our business, as you've indicated, the logistics business held its own. What are we doing about our terminal business? I made mention in the presentation that we have been having more discussions with shipping lines. We're looking for new cargo type. We are expanding our business portfolio. So while I understand the concern, it was more a global reaction to COVID. But we feel that we do have the plans in place to ensure that we will deliver and deliver strong for 2021.
Thanks, Mark. You know, one of the things that we've done strategically over many years is to look at the business in two respects. One is as an infrastructure asset that serves Jamaica and functions as a shipping terminal for all cargo types, exactly as Mark has described. But then to add to that a value-added component in which we handle less than container load cargo, handle its receival, delivery, using modern tracing systems, e-commerce support systems, tracking, etc., in a state-of-the-art warehouse. And that's the logistics component. And I think it's really a testimony to Mark and the leadership of the organization that notwithstanding kind of reductions in commodity flows on the terminal side, you've seen this growth in the value-added component because it serves an important additional need. And so that's what you're seeing in the numbers.
Reference for the next question can be found on page 114 of the annual report. And this is also from Mr. Staples. What accounts for expenses not deductible for tax purposes increasing from 2.7 million in 2019 to 32.3 million in 2020 for the group?
I refer that to Clover Moody, CFO.
Again, good morning again, Mr. Staple. The increase that you referred to, that's the 2.7 million the previous year and 32 million in 2020. Part of that is really a timing issue. And what it actually relates to, it relates to provisions that we would have made for IFRS, and so that we had some increased provisions there, as well as provisions for operating expenses, which were made and included in the accounts, which have not been considered in our tax computation for 2020, but will be reflected in 2021, as well as there's some new treatment for, some new tax allowances related to SEZs, which was also included in that number.
The reference for the next question is at page 124. Kingston Wharves Logistics Limited made a loss of 58.4 million in SSL REIT, despite management estimates that the company would have made a contribution of 43.4 million.
Thanks. Clover, can I have
Okay.
that?
Just want to clarify, this question relates to note 21, which is a note which was carried forward from 2019 annual report. And I also want to clarify that the 58.4 million was not a loss, but it was the carrying value of the investment at the time when we were treating this investment as a joint venture. So it is the carrying value of the net assets of KW Warehousing Services Limited as at October 31st, 2019, which if you look at the annual report, you'll see that it was being compared to the fair value of the assets, and it was used to compute the gain on the disposal of the joint venture. The performance, you will note from note 17, does show that KW Warehousing Services, it was formerly SSL REIT, did make income of $43.9 million. And the loss, there was a loss, but there was a loss of $58,000, and that loss had represented 2 months' losses that related to the period November and December of 2019.
So KW Warehousing Services, which is the name of that vehicle, operates a warehousing facility in Newport West. It's a pretty large facility. It's about 110,000 square feet from memory. And it's fully occupied, tenanted. It's in what we believe to be excellent development land in Kingston, and we're very satisfied with the prospects for that investment.
This next question comes from shareholder Owen Williams. Given the relatively high dividend payout ratio, is the firm missing opportunities to invest in its operations that will increase shareholder value? How does the dividend policy compare with other companies in the industry?
Thank you. I mean, let me just say at the outset that we have reviewed dividend payout ratios of various entities, and we ourselves have an attractive dividend payout ratio compared to other entities. But what you should know is that the primary consideration when determining our dividend payout ratio, of course, is returning funds to shareholders, but also, as was alluded to by the question, in maintaining sufficient capital to develop the facility and develop the best opportunities for Kingston Wharves. Mark Williams, in great detail, I think, perhaps in anticipation of the question, but also in the ordinary course, laid out a number of areas for expansion, including berth development, new cranes, logistics facilities, acquisitions. And I want you to know that we've identified funding, we believe, for all of these key initiatives, and then net of that have identified a suitable dividend payout. But let me ask Mark if he has any further comment on that.
Thank you, Chairman. Just to agree with you, but also to say, it's important for us to, our shareholders do have an expectation of dividend. And we want to be, as I said in the presentation, as transparent as possible to balance the return to the shareholders while ensuring that the business has sufficient capital, cash, to invest in its business. I do believe that the balance has been maintained for several years, and we'll continue to do that.
It was disclosed to shareholders maybe a week ago or so that the meeting of directors today actually was to determine dividends for an interim dividend. And in line with our policy and performance, we have declared a further dividend, which will be notified to the exchange today. And just to say that it's unusual for shareholders to raise a question of the level of dividends not necessarily being sufficient to allow for continued investment. And I think that's itself a testimony to the fact that we have been good about issuing dividends and increasing dividends, and in fact intend to try to continue to do so in line with our policy and the needs of the company.
Thank you, Chairman. Next question also comes from Mr. Owen Williams. Given the rise of cybersecurity issues, what steps is the management team taking to shore up its cyber defenses?
Let me refer that to Mark Williams.
Extremely good question. We're in an era where cybersecurity is a threat to all businesses. What we have done, we have engaged international experts to do audit on our business and to offer a roadmap to ensure that the cybersecurity infrastructure at Kingston Wharves is well maintained. So I wish to give the assurance as much as I can, because as you're aware, this is an ongoing fight, as it were, in this business ecosystem. But we do believe, as of today, we do have a robust cybersecurity infrastructure.
I can just add to that from the board perspective. Cybersecurity is a hugely important question today, and it requires very significant ongoing investment. It requires your board to review that investment and to support it. And so, in line with best practices, we've brought in experts not only to address specific cybersecurity issues, but also to train the board to appreciate and understand cybersecurity risks and the types of initiatives that ought to be taken. And a further initiative that we've done at Kingston Wharves, which I'm very proud of, is we've also sensitized team members, because your management team, your employees are an important first line of defense for a wide range of cybersecurity attacks. So this is something that's being taken at every level of this organization very seriously.
Chairman, I'll read our last question now. Before I read the question, I'll just say that any additional questions that were sent in via email, if it was not addressed in this forum, it will be addressed on our website, on our investor relations page. You can check in the coming days for responses on any questions that were received via email that have not been addressed in this forum. The last question comes from Mr. Owen Williams. Did you report any internal control significant deficiencies as the audit committee this year, to the audit committee this year? If so, please describe the deficiencies in detail and tell us why they weren't called material weaknesses. And by the way, did you initially conclude any were material weaknesses and then later changed your mind?
Okay, so by you, this is addressed presumably to the chair and to the board. And let me, but I will still nevertheless invite our auditors to give a comment if they wish on the subject. So the board of Kingston Wharves has appointed an audit committee chaired by an independent director, Kathy Moss. And that committee meets at least quarterly, means meet 4 times a year. It receives a detailed report from head of internal audit, who reports into that committee, but obviously is also within the management structure of the organization. And that person audits what the board considers to be the key risk areas of the organization, and audits in relation to the adherence to policy, but also identifies whether we're managing risk appropriately and any material control deficiencies or weaknesses. There have been issues that the audit committee has sought to address through management to improve our control systems in the ordinary course. All of those issues have been taken seriously by management and have been addressed. None of them would raise the level of materiality insofar as they would materially adversely affect the financial statements of the business, as understood by me. The board as a whole receives a report after each audit committee in relation to the entire oversight operations of the committee and the internal audit reports. But Leighton, I don't know if you had a comment on that.
And I'll just indicate also that when we audit, there's a lot of judgment involved, and we audit to identify what we would call material misstatement, defined as any adjustment that would affect the decision making by the user of financial statements. So we would have done what we call a management letter, internal control memorandum, which we submitted to management and the audit committee. We didn't identify any material deficiencies in internal control. There were some housekeeping matters that we outlined, but there was nothing significant that we think would have significantly impacted the truth and fairness of the financial reports produced. Thank you.
Thank you for that. That was one of those things that you said in that long thing you were reading, that there was no material.
Thank you, Chairman. That concludes all the questions that we're taking at this time.
Thank you. Mark, I don't know if you had any final comments or issues you'd like to raise before we take the formal resolutions to the board. Thank you. Ladies and gentlemen, I thank you for your comments, your observations, suggestions. We have endeavored to answer your questions and trust that we have done so to your satisfaction. I now wish to proceed to the consideration of the resolutions before us. I refer to the first item of business, which is to receive and approve the audited financial statements for the year ended December 31st, 2020. The accounts and the reports of the directors and auditors have been previously circulated to all members, and Mr. Leighton McKnight from PricewaterhouseCoopers has read the auditor's report. I now ask that the director's report, which may be found on page 25 of the annual report, be presented for its review by our shareholders. And I'll now ask our secretary to read the first resolution before the meeting.
That the audited financial statements for the year ended December 31, 2020, and the reports of the directors and auditors circulated with the notice convening the meeting be adopted.
Thank you. May I have a proposer?
I'll just add here, Chairman, that as we're voting via proxy, and yourself and Mr. Williams have been appointed as proxies, you will indicate by just on behalf of the proxies that it's accepted.
Okay. So I'll ask Mark to propose, and I will second.
I propose.
Thank you. And I'll declare the motion carried in line with the proxy. Maybe take the second resolution.
That, as recommended by the directors, the interim dividend of 23 cents per share paid on August 19, 2020, and of 31 cents per share paid on January 18, 2021, be and are hereby declared as final, and no further dividend be paid in respect of the year under review.
Thank you. 23 cents and 20 cents and 31 cents. Clover, you want to restate that?
So that should read the interim dividend of 20 cents per share paid
My
on
apologies.
August 19th and 34 cents paid on January 18, 2021. Be and are hereby declared as final.
Mark? I propose. A second. All in favor? We'll raise our hands, Mark. And declare the motion carried. Ordinary resolution number 3 relates to the rotation and election of directors. The directors retiring from office by rotation pursuant to Article 107 of the Company's Articles of Incorporation are Messrs. Grantley Stevenson, Roger Hines, Ms. Kathleen Moss, Mr. Kim Clark. All retiring directors being eligible offer themselves for re-election. I now ask our secretary to read the third resolution before the meeting.
Thank you, Chair. Our shareholder has requested that, our shareholder David Rose had requested and proposed that Messrs. Grantley Stevenson, Roger Hines, Kathleen Moss, and Kim Clark, all the retiring directors being eligible, offer themselves for election, be re-elected en bloc.
Thank you for the proposal, shareholder David Rose. We'll certainly review it in future meetings in line with our governance protocols. But for this meeting, given that the resolution is now before us have been distributed to shareholders, we'll take the resolutions individually.
Okay. That Mr. Grantley Stevenson be and is hereby re-elected a director of the company.
I propose.
A second. All in favor? We'll declare the motion carried.
That Mr. Roger Hines be and is hereby re-elected a director of the company.
I propose.
I will second. All in favor? I'll declare the motion carried.
That Mrs. Kathleen Moss be and is hereby re-elected a director of the company.
I propose.
I will second. All in favor? I will declare the motion unanimously carried.
That Mr. Kim Clark be and is hereby re-elected a director of the company.
I propose.
I will second. All in favor? I'll declare that motion carried. Ordinary resolution number 4 is the remuneration of our auditors. I'd like to ask Stefan Morrison to read the 4th resolution before this meeting.
That PricewaterhouseCoopers Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed auditors of the company to hold office until the next annual general meeting at a remuneration to be fixed by the directors of the company.
I propose.
I will second. All in favor? We'll declare the motion carried. Ordinary resolution number 5, directors' fees. And I'd ask our secretary to read this 5th resolution before the meeting, which concerns remuneration of directors. The directors' fees for 2019 are indicated on page 110 of the annual report.
That the amounts shown in the account of the company for the year ended December 31st, 2020, as fees of the directors for their services as directors be and are hereby approved.
I propose.
I'll second. All in favor? I'll declare the motion carried. Ladies and gentlemen, I think our CEO has laid out trends in shipping volumes, the impact on the supply chain. I thought the video was very useful in that regard. We've responded to shareholder matters submitted, including this comment in relation to re-election en bloc, clarified our capital programs, including the berth upgrades, and allowed for questions and comments throughout the presentation of the auditor's report, and obviously in advance of the meeting in line with the annual report submitted. This concludes the formal business of this annual general meeting. I thank you for attending and for your continued confidence and support, which is so necessary for our success. I thank the management team and the organization for putting together the meeting and for continuing to lead and deliver for shareholders. I now declare this meeting closed and wish you well. Continue safety. Thank you.
We are proud to be a part of an industry that is always on the move, supporting your way of life, enabling economic growth, facilitating wealth creation, and opening a world of possibilities to our people. We are Kingston Wharves Limited, the Caribbean's leading multi-purpose port terminal and provider of logistics services connecting Jamaica to over 30 regional and global destinations. Against strong headwinds in 2020, we remained committed and resolute in delivering on the promise of serving Jamaica, the region, and the world as an efficient gateway for bulk, break bulk, and containerized cargo, and as a global motor vehicle hub for our premier autoliners. The global health crisis in 2020 threatened to knock the wind out of the sails of shipping and the wider economy. Many of us lost loved ones. Families faced tremendous social economic disruptions. Businesses experienced significant erosion in revenues and profit margins. Global shipping was severely impacted. In a year when we observed our 75th anniversary, we faced unprecedented crisis that affected many aspects of our business. Yet, undaunted by the turbulent waves, we drew on our years of expertise, the diversity of our business, the vision and innovation of our team, and the support of our loyal partners to steady the ship. We moved with alacrity to safeguard our team and customers, implementing enhanced health and safety protocols throughout all our facilities, and using technology to streamline our business for a safer, more efficient service delivery. And we never forgot to help the vulnerable along the way. COVID-19 never stopped our terminal. We worked 24 hours per day, 7 days per week, to keep the wheels of industry moving and serving the wider population. We played an active role in the movement of all cargo types, including sanitization, medical supplies, and other shipments to meet the needs of the population. All the time, staying unrelentingly focused on our future plans and positioning to accelerate our transformation for service excellence, growth, and profitability. In our 75-year history, we have seen many storms. Though the storm of 2020 was like no other, like all the others, it only made us stronger. The storm is still here, but our ship is steady because our foundation is solid. Our business is dynamic. Our team is relentless, and we are in an industry that has stood the test of time. So we move forward, boldly, propelled by our strategic pillars of people, process, plant, and profit, with customer service excellence at our heart. As we keep our eye on the business at hand, we look to the horizon, prepared to embrace a future of boundaryless possibilities.
We are Kingston Wharves.
I had so much to do for the week. The barrels had arrived at the wharf, but I had no time to go there to clear them. Then Samantha told me about Kingston Wharves Click and Collect cargo clearance. They clear for you, you only collect. It is the convenient way to clear your barrels, boxes, and other personal shipments at Kingston Wharves. I just visited the website eservices.kingstonwharves.com. Click and collect is as easy as 1, 2, 3. Register online, pay online, and pick up at your convenience.
Kingston Wharves Click and Collect, a fast and convenient way to clear your personal shipments. Contact us at 876-577-8905 or call your shipping agent.